And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning. Welcome to the Market Forecast. Today is Tuesday, October the 5th. I'm John Hoagland. Thanks for trusting me with your time. As usual, we're going to be looking for markets in context, always thinking about risk management and infinite in our patience. If you're already in the markets this morning, hopefully things are going your way. We're seeing a little bit of activity here in the crude oil market here, seeing a little bit of a possible opening range trade here. We get a pretty decent opening range so far. We'll pay attention to that as we go on. But as far as economic numbers due out this morning, 7:30, the trade balance came out. They were looking for negative 70.5 billion. It came out a little worse than that at negative 73.3 billion. The trade balance of goods moving into the country at a greater rate than they are leaving the country. 8:45, the PMI final due out. 9 o'clock, ISM Service Index. Both of them not expected to be hugely impactful. And we do have two talking Feds today. If you saw the title for this morning's market forecast, we've got a lot of employment information due out this week. We've got ADP tomorrow, jobless claims on Thursday, and unemployment on Friday. So maybe a little bit of posturing for what we're going to see on Friday as far as unemployment is concerned. So far this morning, we do see the opening range at the high of the session in crude oil. That opening range is approximately 78.76 to 78.75-ish. So seeing some potential for a downside move off of that opening range in crude oil this morning. As far as other news is concerned, these stocks and U.S. stock and world stocks, we should say, are kind of recovering from yesterday's rout to the downside. Investors will be adding Q3 earnings to their already complicated landscape soon here. We're going to start seeing the quarter 3 earnings. Pepsi already out this morning, beating expectations. And yes, aren't we all so thankful that Facebook is back up and running today? Crude traders. Crude is at a 7-year high as OPEC, mostly Russia, has refused to increase production. There's a surprise. Weren't we recently energy independent? Doesn't seem too long ago that I remember hearing something about that. Well, we are waiting for the API this afternoon, as well as the EIA petroleum status report tomorrow. We'll see where we stand as far as crude stocks here in the U.S. U.S. Equities, again, awaiting a lot of information as the week goes on as far as the unemployment numbers due out. As always, make sure you hit that lucky like button. Share, comment, question, feedback, and heckling are always welcome here at the Forecast. Subscribe to our YouTube channel so you can get notified when we do go live. We've got group coaching, which is scheduled for tomorrow at 1 o'clock. Here is the link so you can register and join me. Getting a couple of good questions already from some of our emailed in questions. And of course, we'll be answering questions, if I can, online on the fly. So nobody knows everything. I don't, certainly. But we'll see what I do know. And I always enjoy those sessions. I learn probably more than you do. As usual, looking this morning at the VIX is off just a little bit. I think yesterday morning it was 22.77. Today it's 22.19. The dollar index up a little bit, 93.92. The dollar continues to hold up, and the yield on the 10-year has been holding steady for the last 3 sessions, right around and right on right now, that 1.5%. As always, got to say good morning to everyone. Brian's first one in the room. Brian wins the prize this morning. George, good morning. Bill, Nelson, Charles, Harry, good morning. Daniel, starting your first funded account today. Let's go. Just take it easy. Take it easy. Get your head wrapped around where you are, and just follow your process. Don't follow the dollars. Follow your process. We're looking forward to your success, Daniel. Ricardo, good morning. Theo, good morning. Frederico, Zorain, Adrian, NM, good morning. George, Rob, T, good morning. Steve, Spencer, good morning. Ryan, good morning. Vince, good morning. Justin C. Oh, question. I heard that roughly only 5% or so of day traders make it. Does this align with your experience, the numbers that Top Step sees? Well, it really depends. We see roughly. I don't have the absolute statistics. I know that the traders that I work with on a personal level, we get much better expectations and results than that 5%. I'm thinking it's more like 10% are doing well enough to maintain an account. What is the degree of success that you're looking for? There's a lot of traders out there that are able to maintain an account, and in doing so, I think they put themselves in a situation where they're able to continue to learn and grow and get better at knowing what they're doing. So I don't have that statistic exactly. I know that's a very common statistic, and it's probably not too far off. This is very difficult to do, but remember, there are lots of degrees of success, and it's never an event when you are going to say, hey, I get it now. It's not like a light bulb goes off in your head and all of a sudden you're going to be a successful and profitable trader for the rest of your life. It's all in the hard work we do every day, Justin, that brings us to our degrees of success. Now, success is eventually, yeah, you're making money at this, but there's lots of degrees of success before we get to that point. Yeah, break even is green, Ricardo. Absolutely. This is very difficult, and I believe more people could succeed in it if they, number one, a lot of people run out of money. Of course, it's expensive. The tuition, especially funding your own account, can be very expensive. Or they run out of time, because it does take a long time to do this. When you think about this is a profession. It is a practice. It is similar to being a lawyer or a doctor. That's the kind of education that you want to be giving yourself. And to become a lawyer or a doctor, you're going to school for a very long time, and there's a lot of tuition involved in that as well. So a lot of people run out of money. A lot of people run out of time. And I think one of the biggest problems is our acceptance of change. Most people will do anything they can to avoid change. And if that's the way we're going to be operating, then it's going to be very difficult to accept the changes that we have to make inside and outside in trading. And we have to be able to accept, if we do become successful at this, things are going to change. We have to want that change with every cell in our body, from the top of our head to the tips of our toes. You have to want that change. Okay? Yes, you can always fall back on painting, as former Vice President Joe Biden's son is saying. That is good. That is funny. Janus, good morning. Jason Almin, former Vice President's son. Almin, Angelina, good morning. Chris, Justin C, makes sense. You hang out with rock stars. Well, I mean, you're all rock stars in the rough. Even if you have not yet been successful, if you start doing the things that you should do, and I think we all do slack on that from time to time. I know that I'm up here sitting in this seat at 6:00 in the morning, starting preparation for my trading day, starting preparation for the market forecast. It is a lot of homework, and I start at the end of the day. I take a look at what I've done. I review the trades. I think about how I felt during those trades. I redigest and live through those trades twice a day in real time, and then I revisit them at the end of the day. It is a never-ending process, and every time I have sat back on my laurels and said, you know what, I am God's gift to trading. I've been doing well. I get it now. I'm going to be successful forever. I know that there's danger at my door. Every time I sit back and don't do the work, don't do the homework, I slip back into old habits. I start making the same perceived mistakes. I don't like to use the word mistakes. I like to use the word learning opportunities, if you will. So I'll step back into the same things that I used to do, that we all do, that we are trying to change, because it's just easy. Creating the mindset, creating the habits to be a good trader. It takes effort. It doesn't take any effort to do what you've been doing the whole time, which isn't working. It takes effort to change those things. So be uncomfortable. Demand that you look at things a little bit differently, right? So, we're all looking forward to everybody's success. If we could make everybody successful, imagine how successful we could be. And a lot of it is, your relationship with money. And there's all kinds of things that get in the way that we don't even know, that we don't know that are going on in our brains. I ended up the futures classes basically saying, we are all one big, beautiful mess inside of our heads. If we can straighten out some of the thought processes and make some of the changes that we need to make to be successful, then I think a lot more of us could be a lot more successful. Accept the change. Accept the change. All right. I just recently caught this little guy, this little gremlin here. He has caused a problem with the charts, so I'm going to get those charts up again here right now, and we are going to get through. And I do apologize. This does seem to happen from time to time, and we're going to make sure that we get through this. So here come the charts. Let's get things going. And let's check it out. All right, for the daily in crude, we've got a 7-year high, ladies and gentlemen. If you look at the monthly chart, okay, this is a all-time. Well, this is a 7-year high. Okay, the most recent swing high was in June of 2018, and that was 76.90. So we are well above that. 76.90 was last week's weekly kickoff high. We broke out above it yesterday. We're breaking out above this week's weekly kickoff high of $78. The next swing high on the monthly chart, ladies and gentlemen, is in June of 2014, and that's $107.68. Anybody think we're going there? Anybody think we should have some sort of intervention before we go there? I would think that most of us would certainly agree with that. Volume and open interest yesterday, we added some decent volume to the upside, not tremendous, but we added 25,000 in open interest, indicating a new degree of interest in buying this market. So our upside structure here is being supported by volume and certainly by open interest. The weekly kickoff high, 78, is going to be somewhat pivotal today. So far, it's been left behind. And take a look now at the 30-minute chart. All right, let's see here. Here's the 1-minute chart. So here's the opening range, which remains the high of the regular trading hour session. Look at this, and we're going to see our high for the opening range is 78.86. The low is 78.75. This is an important reference on the daily time frame. Let's take a look at the 30-minute chart. We've got some overnight longs. Okay, we've got a gap opening. So it says if we can't close the gap relatively early, we look for opportunities to go with the gap, which would have us looking for longs. Not ready yet to do that so far because our opening range is the high of the regular trading hour session. I'm going to be looking for this market to close this gap, and if we do close the gap and get back inside value from yesterday and show signs of acceptance, we may come back and roll all the way back to the low of value from yesterday, which takes us back to settlement, which takes us back to an inventory adjustment from overnight activity. So a lot of this depends on if we're able to close this gap relatively early. If we can't, if we take out the high of the opening range, our overnight high as well, that may be an indication that the buyers are just not going to relent, and we may see this market continue this move to the upside. So far, though, as a general rule, I don't look to buy markets where the opening range is the high of the regular trading session. I don't look to sell markets where the opening range is the low of the regular trading hours session. So it's got me just looking for opportunities to look for shorts against that opening range if I can get cheap enough. And if it doesn't work, I'm not going to have to pay a lot, and that's going to change the whole situation for me. Unable to close the gap, taking out the high of the opening range, buyers taking control at that point. Maybe there's an opportunity for the upside for us then. All right, take a look at the E-mini S&Ps. Powell, right in the kisser. Now that's a heck of a chat name. I like that. Oil is super tough to trade. Massive energy crisis, and yes, this is a difficult situation. And there go the charts. Oh, this is such a nightmare, and I do apologize. I did everything, set them up right, did everything I usually do. Had a little bit of an issue with the platform, the switching platform this morning, and now we've got it back. All right, I'm going to stop yammering. We're going to go through these charts, and we may be relatively quick, but that's okay. All right. So here's the daily. Downside volume and open interest is increasing. We see some pretty decent volume as we just kind of range here. Still seeing some pretty decent volume. A 16,000 contract increase in open interest to the downside, but we are having a little bit of trouble accepting below this weekly kickoff low here, 42.90. We see that the market has made 1, 2, 3 excursions. It has not yet been accepted. We saw some recovery yesterday. The market showing some signs of recovery today. So the weekly kickoff low is going to be somewhat pivotal for us. It's kind of a long above, short below, but that has been choppy for us for the past few sessions, so be careful with that. Here's the 30-minute chart. We don't really have a lot of change in value of the S&P right now. We've got our poor low that we were looking at yesterday when we opened in range and value. We went right to, within the first hour of trade, to go and recheck our poor low here. We've got a weak low here in the overnight session from the night before last. Not as powerful as a situation as the poor low from the day session. We traded to it. We waffled. We returned. We closed again back above the weekly kickoff low, 42.91 quarter as settlement. You may want to put that up on your charts, 42.91 quarter. And the market has, it's accumulated some overnight longs here. We're going to be opening in range and above value. If the market leaves the opening range at the high, that could bring us back to a recheck of settlement and the weekly kickoff low. If we leave the opening range, the low of the session, however, that might mark buyer control, and we may see this market return back up and just kind of repair some of the information left from yesterday's kind of push to the downside. Very little time, very little opportunity to participate there. We may fall into some degree of repair. So we may see the same thing here in the gold as well. Here's the NASDAQ, however. All right, so volume and open interest increase on the down day. That's very typical. Adding 7,900 increased in open interest yesterday. That's a pretty good increase. Obviously, our medium time frame structure is intact, and it is to the downside. Take a look at the 30. So very similar situation with regards to the location of settlement and the rejection below weekly kickoff low. The weekly kickoff low in the NASDAQ is 14,437. We see that we took a look down below it, We didn't even come down here to check any of this information down here. The fact that we didn't check this naked point of control or this small gap down here, we stopped short of it, can be important information. The market, I think, got a little bit too short in the push to the downside, and we were able to recover and close back above that weekly kickoff low. Settlement 14,462 and a quarter. Put that on your charts. The market basically in a similar situation. We've got some overnight longs. We're in range, but outside value. Opening range may be something that we're going to want to look at. The opening range, again, that first minute of trade, when the market breaks out either side of it, you go with that. And if it's a small enough opening range, it's a very easy way to manage your risk in that regard. So, let's see here. Oh, there go the charts. And no, Fred, I don't think that I'm going to be singing while I do this, although there was a time that I might have been able to do so. And we are back. There we go. So, again, very similar to the NASDAQ. Try and stay a little bit patient. Watch the opening range trade. If we do fall into a degree of repair, be patient. Let the early range establish itself and then work those extremes. Gold. All right. So we have a kind of a contrary move here. With slowing volume, we've had 1, 2, 3 bear flags. Is this another bear flag? It could be. It seems like it's looking to break out to the downside now. We've got another trend line here. We've got 1, 2, 3, 4, 5 points of contact. It might be interesting for us to look for an opportunity at the current price, but I'm not going to be jumping into anything real quick here. Open interest is higher, trend is lower. Is the downside starting to slow? I mean, taking a look at the volume as we put in these lows, it was pretty good. A little lower coming off those lows, and an increase in open interest on an up move yesterday, maybe indicating maybe we get a little bit long here. So let's take a look at the 30-minute chart. We had initially the opening range was the low of the regular trading hour session, but it did open in range and in value. Excuse me, my goodness. And opened between high volume nodes. We've got our point of control up here, which is very close to the settlement price, 1767.60. We've got another high volume node that we have just traded down to here. Typically, there is a probability if we open between those two high volume nodes in a double distribution day, the market may try to repair all of the toothiness between those two high volume nodes. That would suffice to say that our current low might be an interesting spot for us to look for an execution. If you can lean against yesterday's regular trading hour session low, that might be an ability to comfort. But other than that, I'll wait for perhaps some better structure at the low here before I start looking for the market to return back to the point of control. And anytime we see this area of balance here, we're looking to fade the extremes of balance until proven wrong. I'm going to be looking for short time frame levels with which to lean on until that point. Euro. So we certainly have a situation where the market has been moving lower. It's tested to weekly kickoff high yesterday, unable to break out above that. We're setting up a bear flag here. Volume is slowing towards that weekly kickoff high. You see how volume slowed. We did add 3,400 in open interest, so that means that some new buying did come into this market. And so just kind of focusing on this bear flag, we've got an opportunity to break out below that bear flag, pretty close to that level right now. Overnight low and weekly kickoff high range targets. If we're going to stay range bound, this trend line, and that the weekly kickoff high would be interesting areas for us. Let's take a look at the 30. Okay, overnight we've got some short inventory. We've got a gap to the downside. So that means, hey, if we can't close this gap relatively early, this may be indicative of a breakout of our bear flag. And there go the charts. And gonna get through this. And there we go. So gap rules. If we break up below this trend line on this bear flag, the move is to the downside. We can't close the gap. That also says move to the downside. Yes, it is the gremlin. The gremlin is getting me. All right. 10-year. Rates have been holding steady for the last 3 sessions, or at least the recent sessions here at 1.5%. Volume and open interest slowing. Although we did add 3,400 open interest yesterday, but in the longer time frame, volume and open interest at least has been starting to slow. It's been cutting off. Overnight low and weekly kickoff high. Hang on one second. Balance is beginning to form here, and so we're going to be looking at balance rules. About 3 days of balance. The low here near the lower extreme, the upper extreme, last week's high. We've got a lot of space around us to reach weekly kickoff levels, and I'm starting to think with this whole situation that the market is falling into short time frame control. Short time frame control, what does that mean? It means we look for short time frame levels with which to look for opportunities. We had overnight shorts got out. Overnight shorts, a little bit of an inventory adjustment just before the open, actually. No real acceptance inside value. So the fact that we are kind of trading below value gives us a downside tint to it, or a hint to it. We've got a gap down here with which to fill. We also have a naked point of control down below that, which I don't think really changes our market state at all. So I'm going to be patient. I'm going to be looking for short time frame levels, perhaps this gap fill, perhaps this level down here. That takes us down to weekly kickoff low, which, by the way, is 131.16. And so we'll see if we have any opportunity here. I know that it's this is a tough market to trade, even though all markets have one thing in common. They are never-ending two-sided auctions. To the natural gas. Okay, so been calling this kind of a loose balance. Looks like we are breaking out to the upside above that loose balance. I'm not looking to look to sell anything in this market while the nat gas is in its current situation. Higher lows, even highs. Are we breaking out the even highs up here? It certainly looks like it. On an up move yesterday, even though we rejected above weekly kickoff high, we added 11,000 in open interest on higher volume, overlapping to higher range, higher volume, higher over open interest, healthy upside auction, evidenced by the action so far today. So we were looking at balance rules. I think we've broken balance rules. If we continue to show acceptance at higher pricing, you've got to look for opportunities to buy pullbacks or buy weakness in this market. If it comes back and falls into balance and shows a reacceptance inside that balance, that changes things. Here's the 30-minute. Got a little bit long because of these darn charts. There it is. So we had some overnight inventory to the long side. Very little attempt to kind of reconcile those overnight longs. They're actually getting help in the regular trading hours session. Try not to fight this move to the upside. If we start to build some structure up here, use some of that structure to continue this move to the upside. and or perhaps find opportunities to the downside. But this market is so strong, I'm really weary about trying to sell anything. All righty. Do the Sammy Davis song. Yeah, who can take the sunshine? And somebody's rocking out some Aerosmith this morning. And yes, I'm gonna take care of this little guy, my little gremlin that seems to be causing the problems. He's running around, jumping and doing things. So, all right, let's get down to business. Take your deep breath. I know we're a little bit into the equity open. I don't like doing that. Trade well today. We'll look forward to seeing you for the coach's playbook this morning, and we'll see you back tomorrow morning on the market forecast and group coaching tomorrow. Trade well, get out there and profit. I'll see you in the pit in about 1 minute. Have a great trading day. We'll see you later.